Okay, let's get started. Good afternoon, or good morning, or good evening, everyone, depending on where you are staying currently. And welcome to this session on common capital market infrastructure for the region, where we will be discussing the benefits and maybe also drawbacks from more cooperation and also competition in capital market infrastructure, particularly also in the post-trade layer around clearing and security settlement. If you look back historically, basically every market, every country used to have at least one marketplace or many marketplaces depending on the country. And then over time, domestic basically venues formed, infrastructure formed, were integrated, with each country still largely having their own capital market infrastructure and exchange marketplace. But obviously, especially smaller countries, then at some point also maybe struggling given the smaller scale they have to really then leverage the fixed cost of an infrastructure. And many countries also started looking to other markets, how they can better cooperate and leverage capabilities and spread fixed costs across markets to build scale and to provide better services to markets. So that has been happening sometimes with M&A, with acquisitions, if you look at Europe and the US to some extent, or sometimes also partnerships, joint ventures, collaborations. And we've seen quite some developments over the last years. And today, what we want to discuss basically also, especially also in the GCC Middle East region, there are a lot of discussions around how can the region collaborate across the market infrastructure layer in order to really provide better services to clients and also cross-market access to, for example, international investors to increase liquidity and so on. So we want to discuss this in this group. We have a panel where we have Abdullah Abdin from Bahrain Clear, Senior Director of Operations. We have Werner Frey, who works in management consulting with many exchange groups with a long track record in the industry, and also Carol Biao, who works in the global market development section of the Milken Institute as a director. All of them have a lot of experience in the capital market infrastructure space, and we will be discussing some examples from other markets, international markets, around cooperation and competition, but then also specifically look a bit into the region. What are the implications? What's the potential vision? What are for the region also in terms of collaboration and cross regional infrastructure, and what are potential drawbacks also to consider based also on the lessons learned in other markets. I would like to kick off with posing a broader question to the panel around cooperation and competition in market infrastructure, especially in the post-trade layer. What are the specific consideration when it comes to cooperation, such as infrastructure, risk models, market models, technology? How do you see cooperation and competition at the post-trade level, at clearing and settlement specifically, more broadly before we go into the example? I would like to hand over the word to Abdullah, who gets us started to provide some perspectives on this question. Abdullah, over to you.
Thank you, Tobias. Basically, the question was if there are cooperation in the region. I would say yes, which we will cover in a moment. And on the other hand, if you say if there are any competitions, I would say no, for one single reason. the regional markets at different levels, the market regulators, the market operators, and the post-trade service providers, i.e. the CSDs, whether they are divisions within the exchange or an independent clearing houses. So we basically complement each other. In another word, we complete each other. At the regulator levels, the regulators in the region, they really meet frequently, at least twice a year, to look at unifying the regulations. I think this is their main focus, to make sure that regulations are unified. And one of the achievements that have been done so far in the region, that they have unified and released a single listing rules. The main reason behind that is that we have lots of cross-listing is happening within the regional markets, which we also discuss about how it goes. So the market regulators, they meet frequently to unify the regulations. They've been focusing on the listing rules, which we became today live and it's being implemented. The other two main regulations that they are currently working on is the market operations, i.e. trading rules and regulations. We need to look at the trading timings and even the market rules of the trades. Last but not least, as the CSD rules. So these main three initiatives that they're working on in order to be unified by the regulators. So looking at the market operators, i.e. the exchanges, they also meet in parallel in order to also overcome any challenges resulted from unifying the regulations. In addition to that, looking at the different risk models and also the technology, it's really very important, the market models, and believe it or not, the technology itself, since we have the regulation is unified, and then the technology might be another challenge. But if the technology provider is the same vendor, i.e. usually most of the market operators, they use the single technology, which makes even having this cooperation easier. At the CSD and the clearing houses, we are also meeting through different organizations, international organizations. At the regional, we have an independent that we usually meet to also overcome the post-trade services. We need to look at the primary market services that are provided by the clearing houses. We need to look at the, when I say primary market, we mean that the clearing house's role would be to be the IPO agent and using the nowadays digitalization of IPO. So e-IPO have been implemented in the regions since 2018, if I'm talking about Bahrain. So this is the primary market. We look at the market entry that comes post-listing, and also the clearing and settlement. And last but not least, it's the post-trade services, i.e. asset servicing, and which is really very important for most of the shareholders, that they need to make sure that they get their entitlements on time. Tubais?
Thanks a lot, Abdullah. That's been very insightful and gives a good entry point into the discussion. Would hand over to Carol for some perspectives, then more broadly on the topic, also from an international side, on her experiences and insights into the overall question around cooperation and competition at the post-trading and clearing settlement layer.
Thank you very much, Tobias. It's a pleasure to be here with everyone. To give some context, at the Wilken Institute Global Market Development Team, we work mostly with emerging market and frontier market economies as they strengthen and deepen their financial markets. And so I know my colleagues will have examples on the GCC region and also on the EU and the US. I'll focus more on the more emerging markets, if that's all right. So first of all, cooperation is something that is the I would say, the primary objective of what we do. We run a training program in partnership with the International Finance Corporation that trains policymakers and regulators. And so around more than 45 countries. And so collaboration across these governments is one of the key ideas, whether it comes to capital market infrastructure or to some of the regulatory cooperation that Abdullah was mentioning. So with that, just a second. Sorry. So with that, just turning to some of the bigger picture for the advantages of regional integration. So several of these markets, when you're looking at frontier and emerging markets, I would say, especially the challenges of small scale and liquidity, it's really not a question of competition necessarily, but really the importance of cooperation, given that capital market infrastructure and integration can provide firms with more competitive funding, and deeper markets can support investments in physical and social infrastructure. I think we're all familiar with the benefits of regional cooperation. On the fiscal side also, once a lot of these markets where the infrastructure and the trading is more nascent, once the capital markets start to grow, they can finance a larger part of the regional economy. Costs of government borrowing can also decrease. So there's a lot of benefit for a lot of countries, especially in emerging and frontier markets. Finally, I think that we all know that integration can create expanded uptake of regional debt instruments and the creation of new instruments, and greater market scale, of course, which is another reason for these countries to do this, is to attract more international investment. So really, I think a lot of regions are trying to increase their capital market infrastructure integration. And of course, it's not without challenges. So we can go into the details of some of that a little bit later. There's a lot of political economy challenges in addition to the technology pieces that, that we've started to outline. I would just say that when we look at the different initiatives just briefly around the world, there's, for instance, I will talk more about the efforts in East Africa later on in this panel to create a common central securities depository for the region. But otherwise, and not necessarily just on the post-trade side, in Latin America, Colombia, Chile, and Peru have been working on the Mercado Integrado Latinoamericano, the SMILA initiative, since about 2011 and for quite a while, and that's been quite difficult. Though they continue to try to move forward. That would be on a common stock exchange, and of course the rules and regulation harmonization and some of the taxation elements are issues to address. There's also interesting efforts with the Arab Monetary Fund and the BUNA initiative, which is a regional cross-border payment system that we might address later on. And then the ASEAN region has also been trying to integrate, and this is in addition to the European Union Capital Markets Union and all these other efforts. So I guess this is just an example to give you an idea of outside of the GCC region. Obviously, a lot of countries are considering the regional integration, but in several cases, there's the political economy concerns. Often, if one country is a bigger market than the other markets, then that also poses some concerns. And this is in addition to the purely technological pieces. And also in addition to the fact that there might be competition, not just between countries, but also inside a country with different pieces of infrastructure. Let's say when a country has multiple CSDs, there's some questions around that as well. So I would be happy to go into further detail on the East African region in particular at a later point.
Perfect. Thanks, Carol. With that, I would say that we turn to the examples and case studies already mentioned, and starting first with the US and Europe. Europe in particular. I mean, the US always had the advantage of having a big market to start with, and thereby can have quite an efficient setup in terms of post trade as an example, whereas Europe has been highly fragmented in given the different countries and languages and so on, and also laws and regulations. But there's been still quite a bit of cooperation, pushes to corporations, but also obviously acquisitions, M&A, but also sometimes players developing pan-European market infrastructure offerings. So I would love to hear from you, Werner, a bit on your experiences around collaboration and competition, especially in the European market, and also if any contrasting to the US. Obviously, that would also be interesting to start off with those markets.
Thank you, Tobias. I will. You can hear me. In the private sector, the biggest potential for cooperation is, broadly speaking, in areas where there is a common goal. In other words, it is essential to focus on common interests and solutions that benefit many, if not all. To make a clear difference between areas of common interest and areas of competition is essential to foster cooperation and reduce complexity and thus cost, and increase at the same time efficiency and regional competitivity internationally. A good example for such cooperation has been the standardization of corporate actions processes in Europe, possibly one of the most complex areas in post-trade. The Corporate Actions Joint Working Group, which I had the honor to chair, with members from all relevant markets and constituencies, that means market users and financial market infrastructures, from Rome to Helsinki and from Lisbon to Warsaw, agreed on some 120 standards that have been successfully implemented throughout Europe. ISA has transposed these detailed standards into a smaller number of international standards. Turning to the blockages and the public sector, experience in Europe shows that legal differences and the lack of political will are the biggest hurdles to reduce fragmentation. The lack of real success of the Capital Market Union project of the European Union is a telling example. Targeted legal harmonization is an essential basis for increased cooperation and integration of markets. EU regulation without legal harmonization is necessary but not sufficient. Tobias?
Perfect. Yeah, I think some very good points, especially around having a mutual interest, and I think that's sometimes difficult, especially also in Europe, where obviously each country may have similar but also differentiated interests, so that then can stand in the way of harmonization. Good. We have. I mean,
should
exactly.
I continue?
Exactly. I mean, maybe also especially around what our next point we want to discuss is around the clearing side. I mean, there has been pan-European clearing services, for example, in equities, also based on interoperability between those markets. If you look at the likes of 6 Euro CCP and LCH offering pan-European cash equities clearing, which is definitely a good example of a regional approach, which also required some at least connectivity, if not collaboration, between these venues and markets, but also creates at the same time some competition. How would you view that in terms of benefits or also potential drawbacks of these developments in Europe?
The key word in this context, obviously, is interoperability between CCPs. Interoperability could be described as a co-opetition model. That means a combination of cooperation and competition. Users benefit to the extent that they do not necessarily need to become members of multiple clearinghouses, and that netting ratios tend to be higher. However, we should bear in mind that clearing does not eliminate counterparty risk, but transfers it from counterparties of trades to clearinghouse. By that, accumulation of risks takes place at the clearinghouse, and this also applies with interoperability, where clearinghouses become members of each other. Yet, regulation to mitigate these risks have been developed earlier in this conference. The new chairman of the CCP Supervisory Authority at ESMA, Klaus Löber, was speaking, and therefore there is no need to reinvent but apply the mitigating mechanisms. Finally, I would offer an unconventional thought. Why not combine the private sector expertise of clearinghouses gained inter alia during the financial crisis in 2007 and 2008 with the role of central banks or a group of central banks as lenders of last resort, a risk mitigating function par excellence, possibly rather than building a low risk settlement platform like Target 2 Securities. Tobias?
Yeah, some interesting and thought-provoking points here towards Europe. And I think that concludes also very well the European side, which has, I think, we can also hear from Werner, which has some success stories, but also some difficulties that are becoming apparent if cooperation is being driven then across many markets. If we turn now to Carol, and she already hinted at that she has some experience, for example, in the African region around regional collaboration in the market infrastructure and post-trade layer. What would you highlight in terms of key lessons, both in terms of potential benefits, potential watch points, drawbacks, that could then also be interesting for a region like the GCC and broader Middle East?
Sure, thank you, Tobias. If you'll bear with me, because it's a pretty long story, but I think it can be quite informative. And as I mentioned, a lot of it on the political economy side, actually. So some of this can be potentially helpful for countries in the GCC region that might be looking to do the same thing. So the East African countries, so this is the East African community made up of Burundi, Kenya, Rwanda, Uganda, and Tanzania. So I'll speak mostly about the latter four because Burundi has very nascent markets. But starting over 2 decades ago, there was a very clear sense of common purpose, and the countries definitely wanted to integrate their markets, including their capital markets, by the time they developed them. Then in 2011, the East African community partnered with the World Bank to develop common capital market infrastructure. And however, this project has actually been quite difficult to put into place, and it's still making some progress, but it had several years from 2014 to 2017, and even now, where it was stalled and where largely the most important and largest market in the region, Kenya, actually stepped out of the whole project altogether. So this is something that some of this could have been easily avoided. So I'll just share some of these lessons. So the first thing, stepping back from the procurement process, is just the decisions even within a country in order to integrate. And I should mention, this is just about CSDs. It wasn't about CCPs. So it was just the CSD part. For countries to decide to even integrate their CSDs, the first question was, can they consolidate the number of CSDs within one country first in order to then collaborate across the region? Again, the point being this fixed cost you mentioned, Tobias, and the fact that all of these countries don't need their own infrastructure because the liquidity and the turnover is quite low. So in 2011, they decided to set up this common infrastructure, but then because the progress was so slow, by 2017, they actually all had set up multiple CSDs in the interim, which kind of defeated the purpose. In terms of the CSDs themselves, that was quite political because it really raises a few different questions. One of them is whether there should be different CSDs for different asset classes. Second, which institution is better suited to host that CSD? And then third, public and private ownership structures for the CSDs. So in these countries, usually there was one CSD established for treasury bonds, and then one for equities and corporate bonds. Usually the treasury bond one was hosted by the central bank, and then the equities and corporate bonds one was hosted by the stock exchange. However, because the treasury bonds really make up the most of the market, and the equities market is quite small, this ends up giving the central bank owned CSD most of the power and most of the negotiating power, which then makes it quite difficult for CSDs within a country to actually, for one CSD to relinquish or to further cooperate with others because of this unequal balance of power. So there's a case for consolidation, but there's, in a way, there's a lot of power of the central banks in this conversation, and so a lot of countries just hold on to both of their CSDs. Another point is around competition and competitiveness. Again, as we know, for capital market infrastructure to respond to market trends, they have to be subject to appropriate oversight in line with the IOSCO principles that we're all familiar with. And CSDs need to be able to raise capital privately or through public markets when required, and not be politically influenced. And again, that's where there's a suggestion for more private ownership, but often in the region there's, or at least majority private. Again, there's a much more public ownership of the CSDs in the region. So all of these different pieces, just to give you a sense per country, has made it more difficult to even have the conversation internally before you even start talking about the regional integration option. Then when we go back to the actual regional integration project, as I mentioned, it started in 2011, and it's really too bad because it is something where there was strong political will, which is often difficult to have. And there was actually a lot of motivation to harmonize regulations, particularly because, unlike in Europe, there weren't that many legacy, regulations really in place, so everything could be developed simultaneously. The challenge is that the procurement system that was landed on was an interlinked model. So rather than having one CSD as a hub with the spokes being in the different countries, which would be more cost effective, that was decided that was too politically difficult because the hub would naturally be in Kenya, and that might attract all the liquidity at the detriment of the other markets. And so the interlinked model, where all the different CSDs would just be connected through smart order routers, was opted for. And then the procurement process around that was launched by the East African Community. It was initially supposed to be a three-part procurement with the smart order router, an interlinked CSD, and then a messaging system. But when the Secretariat for East African Community launched this procurement, they bundled it into a single procurement, which meant, it seems pretty minor, it meant that many companies were out of the bidding, such as Swift, And only 2 companies ended up being able to bid because very few companies are able to do all 3 pieces at once. And this meant that the countries were quite dissatisfied with who won the bid, and they requested a rebidding, but that was just denied. And so since then, Kenya has not rejoined the project because it's very dissatisfied with the winning bidder. And so this is a little bit, Kenya would have been on board and the countries would just have gone forward had the procurement process been run correctly. And instead, as a result, this process has been stalled and restarted several times. The countries are now making more progress. The other 3 countries are making more progress, but Kenya remains outside of the picture. So this is a long story to sort of expose both the internal political economy within each country, and then if the countries do opt for an interlinked model, or hub and spoke is even better, to just be very, very careful about having, it sounds obvious to say, but an inclusive procurement process, a competitive procurement process, that all the countries are consulted, that the regulators have a say, so that the outcomes don't end up really backfiring. So maybe I'll stop there. I don't know to what extent it actually is fully applicable to the region, but especially the fact that different markets have different sizes and that they're very, in some cases quite cost constrained, can make this picture quite complicated.
Well, thanks a lot, Carol. I think I would agree that what we've also seen is often that there is a clear business case, of course, in combining infrastructures, but the political elements are of incredible importance to get right, to have everybody involved, to also ensure that each country, each market also has enough say in the governance, and also even in things like, and most importantly, what systems are chosen, how is the procurement process run, and so on. Because in the end, it might then be a costly project, and you end up with someone else's infrastructure and so on. And then you're forced into a model where you feel you don't have any control around it. And then you'd rather pull back and build something on your own, which then often can happen in this situation. So I think that's definitely a very important lesson learned, and something I've seen also in other markets happening. If we turn to the GCC and broader Middle East region, and Abdullah already started on it, but maybe what if we think a bit ahead, what would be your vision of how the different countries, markets would be collaborating? And to some extent, maybe, as you say, they're not really competing, but some competition is still can also be positive. How would you see the vision for your markets?
I think it's good to start to say, does the competition create integration? And I think Carol was also right to have setup and some of the infrastructure really would be costly for some of the markets with not having a proper liquidity. So if you look at the CCP, to set up a CCP, it's really very costly for some of the region and for some of the markets. So why not having a single CCP in the region and having sub CCPs among the countries or markets where they have less liquidity? So this creates integration. This will create collaboration as well. Do we need more collaboration? Yes, of course. In Bahrain, the foreign ownership limit has been open ever since. So the foreign ownership is 100% open, which actually attracts the regional shareholders to invest more in the region. And on top of that, in the region, we are the most market that we have local listed companies are cross-listed in the region. So this requires us to have a proper integration in order to have cross-border clearing and settlement with our colleagues in the GCC. As I've mentioned, there are lots of collaboration. There are lots of needs to do that. There are common factors between the regional exchanges, rules, regulations, market infrastructure, market models, settlement cycles, so T+2, for example, it's implemented. So the working hours, these are all advantages that push the regional markets in order to have proper integration, cross-border clearing and settlement. Tobias?
Perfect, thanks. It makes a lot of sense that, especially as you say, models where you have hubs and spokes, where you potentially leverage a common platform and infrastructure, but create different instances so that each country still has a certain amount of control. And also from a regulatory legal standpoint, there is also, especially in clearing, also, obviously bankruptcy, default law. There is a lot of elements that if you would centralize it potentially too much, where countries could then not feel comfortable having it completely out of their jurisdiction and control. And we've also seen more and more promising setups where we would have common infrastructure and maybe even a common operating platform, but then potentially separate legal and technical instances per market. Like that can.
If I may, Tobias, we have a live example. We had one of the local issuers plan to cross-list in DIFX, and all we know that how DIFX performs. So integrating different business models, different risk models. I'll give you an example. At that time, when we have done this cross-testing and integration with DIFX, we were marrying a market with DVP model 2, i.e. gross at securities and net at cash, with the market having implemented a DVP 3, i.e. net at securities and net at cash. So it was a very challenging integration, but we successfully made it done. And as you know, even with different settlement cycles. So it was a very live and successful example, marrying two different DVP models and two different market infrastructure. Tobias?
Yeah, very interesting. If there is a will, I think technically a lot can be achieved, even if it's complicated. That's a very good example. I mean, if we come to technological, but there are also regulatory points. If we maybe start with the regulatory and then see whether we want to quickly touch on the technological side. I know there's always different opinions around topics like DLT and so on. So let's maybe start with the simple one around regulation, because and I think it has already been mentioned to some extent that it's very important that also regulators in the region have frequent exchanges and also try to harmonize as much as possible in order to then facilitate such collaborations. Maybe that one to Werner, how do you see regulation helping cooperation, but sometimes also maybe hindering collaboration and fostering competition? Any lessons you see also, for example, for the GCC region around regulations seen in other markets?
Let's not forget the AML policies are really very important and critical for the regulators. And market operators, they do their level best. They always sit in the middle. Market operators could be an exchange or could be a clearinghouse. AML, it's something very critical. We are in the middle. We need to facilitate easy the processes to the participants, i.e. the brokers and the custodians, and also their client. On the other hand, we need to make sure that KYC is fully implemented and risk measures and internal control are in place. The COVID itself, I think it fastened the need of having digital onboarding and to work in complete paperless environment. So we could see this examples happening in the region here, and Bahrain. We're also having the regulator are very supportive in order to push forward having more digitalized environment. We succeeded and lots of internal processes to be digitalized. And also we are in the process to implement a platform to fully digitalize onboarding of the client. Let's not forget the challenge in the regions that the account infrastructure is beneficial ownership, i.e. the market operator have to directly deal with the end beneficiaries or investors, which makes even the operations and process activity to be more risky and more lengthier. So DLT, it's something that we are taking into consideration. And we think it increases the liquidity, it will increase attracting more local and foreign ownership to access, since we have all of the aspects are in place except for this only burden when it comes to enter any market. Now, we are also in the process for our colleagues in the region to unify, let's say, the investor number, to unify, let's say, the market entry, i.e. if a client wants to enter market A, so why not him being automatically accessing the other regional markets? So you have one single stop shop for each shareholder. I access one market, I do my KYC with one market, and then I have access to all of the regional. We are aiming also, for the time being, I'm chairing the WC, and also I'm chairing the AMIDA, African and Middle East Depository Association. We are trying to take this experience and practice to the African and Middle East, and also to hopefully expand it to the World Forum of CSDs. Tobias?
Very interesting. I think especially onboarding processes and so on, that's definitely an area where there can be quite some advances with new technologies, and potentially also a role for infrastructure, then even do this more broadly in the financial system, which is something we also see in other markets. And maybe Werner, over to you in terms of anything to add on the technology side, or also on the regulations aspect.
On the regulation aspect, thank you, Tobias. Safety versus efficiency is the key word, and often it is not well understood that a higher degree of efficiency is reducing risk and therefore increasing safety at the same time. Yet in Europe, since the financial crisis 2007-2008, regulators have focused primarily on safety at all levels of the trading cycle. Take MiFID, EMIR, CSDR as examples. However, as outlined in the report of the latest expert group I was a member, that started in 2001 with the Giovannini Group, and since then I was a member in all expert groups set up by the European Commission. In this report of the European Post-Trade Forum, EPTF of May 2017, unfortunately, the report is resting in a drawer in Brussels. Since then, efficiency of post-trade processes still require sizable barriers to be dismantled to achieve the levels defined by the organization. I was the managing director of Post-Trade until mid-2019, the Association for Financial Markets in Europe, in its roadmap for integrated, safe and efficient post-trade services in Europe 2018. And in this context, again, T2S is not a good example of the role played by regulators. The ECB in this case, because original financial goals and targets have not been achieved, and T2S has simply added an additional infrastructure layer in addition to national CSDs. That means regulators and policymakers must play an important role to enable integration by means of harmonization and standardization, and that requires a close cooperation between the private sector and the public sector. This clearly is a lesson learned in Europe. As to technology, years ago, when DLT was a hype, I think it no longer is, I told participants of a conference that anyone who believes that DLT can be a solution to a complex corporate action should send me a postcard. Today, I have not received a postcard. But one thing is clear for me, that a combination of process-related know-how and experience on the one hand, and technology on the one hand, but only a combination of the two could be a game changer going forward. Tobias?
If I could just jump in, just
Sure.
to echo those points and say how much I agree on the points around efficiency and safety, and that's something that, you know, as I mentioned with the training program we run together with the IFC across more than 40 countries. We have over 120 policymakers and regulators have participated in this program, and it's a pretty rigorous 8-month-long program where we have workshops with the US SEC. We have a full, you know, degree program, and people do internships in the private sector. One of the main questions that always comes up for these regulators is how to balance a market. It comes as a surprise to no one, but how to balance market innovation and you know, regulation, obviously, and how to keep up with the pace of market regulation or market innovation, particularly in these countries that are innovating quite quickly, emerging in frontier markets where fintech and the possibility of leapfrogging legacy, you know, solutions and legacy infrastructures is really promising. So this idea, the regulatory cooperation is very helpful and very, very important, but equally the idea of a good regulatory balance and taking frequent inputs from the private sector to be able to keep up with the game is really crucial. And we've seen it come up over and over again. But we've also seen huge appetite for collaboration across countries. So, you know, our alumni are always talking to each other across Pakistan, Kenya, Nigeria, you know, exchanging ideas. And so, you know, I really think it needs to be a bit of a mindset change in many regulatory agencies. And what we're seeing is the more open they are, while remaining independent and not subject to undue influence from the private sector, the more regulators can make this part of an organic decision-making process, the better. Just a quick note on the DLT side, we were having a discussion about this with the World Federation of Exchanges and Euroclear, I think just 2 weeks ago with my students, and asking about, well, first of all, would DLT be able to revolutionize what we're talking about just now, particularly across the cross-border, it would have a lot of potential. And then also, what does that mean for CSDs? And so the conclusion was, much as Werner mentioned, you know, DLTs have actually, this concept has been around for a while now, and it hasn't happened yet in terms of at least these solutions that we're talking about. And so the idea was, well, CSDs wouldn't go away, they would probably just have an enhanced function by collaborating with some form of DLT technology. That said, we're still optimistic that there might be a way for DLT to work for countries in the region, because including when it comes to you know, reg tech and to saving a lot of costs on lots of, you know, for countries that have regulatory capacity challenges, having a DLT structure could be very helpful. Also having less sort of currency convertibility challenges, reducing all those transaction costs can really make a big difference for for less developed markets. So I haven't quite, I'm still hopeful, but I also take Werner's point that that the hype, is fading, and so hopefully, if we can see some applications soon, that would be helpful.
Yes, thanks a lot. We're getting to the end of our guideline, basically, we've jointly developed in this panel. Are there any final remarks on the regulation technology side, or more broadly from the participants? Also, if there are questions, obviously, we can also take some additional questions from the group.
Just a quick question, Tobias. Do you think it would be beneficial for our colleagues in the Middle East to learn what I would deem the 5 most important lessons of the European development of the last 20 years?
Sure.
Then let me kick off. As you might have noticed, I'm possibly more critical than panelists in other panels, but that's the price to pay for being around for 20 years in this area. But let me start first. Refrain from generous headline grasping but unrealistic undertakings and projects. Rather focus on targeted issues that require solutions and for which a broad agreement is feasible. A bottom-up approach is more promising than the top-down approach. Second, legacy structures and processes are hard nuts to crack to achieve higher efficiency through harmonization and standardization. Avoiding such legacies, for example, by agreeing on a regional CCP upfront instead of creating national CCPs, should be the preferred route. Third, and I referred to it earlier, a close and equally ranking cooperation between the private and the public sector is a key for success. That means a combination of private sector know-how and public sector authority. Fourth, a small number of competitors, such as Euroclear and Clearstream, tend to be more innovative than monopolies. Fifth and last, do not reinvent the wheel. Building on available in-depth analysis and successfully implemented solutions is definitely superior to setting up yet another expert group. Thank you, Tobias.
Thanks. I think these have been great final words on this topic, and I think we can definitely learn from that long track record in probably one of the most complicated political environments. But as you say, I think there's also opportunities if you don't have to build on such an old legacy like you sometimes have in Europe.
Yeah.
For newer regions where market infrastructure is fresher, so to speak. So there you can probably jump some steps and reach a more efficient model from start. But I still want to quickly just look into the direction of Abdullah and Carol, whether any final words also from them.
Yes, please, Tobias. From my side, just in a couple of minutes, I think clearinghouses and CSDs can really do more than the core business. In Bahrain, we've already started this year providing ancillary services for non-listed companies, i.e. we started providing registry, auction market, asset servicing for closed companies that they are not listed. Because for the time being, if they don't have an organized market, the cost of transfer of ownership is really very big. So we took the initiative to do that. And there was something on the other hand, 10 years ago, we were in one of those media meetings. the managing director of the Egyptian clearinghouse, Mr. Mohammed Abdul Salam, was trying to get thoughts of how can we provide services out of the box and then get more revenue. So they were all talking about core business activities. Then his idea was to have a soccer team for the CSDs. I was the first one who actually laughed at that meeting, but today the Egyptian CSD soccer team is ranked the second in Egypt. And then we've seen the financials of the Egyptian soccer team today. They made millions of pounds out of this business, in addition to other non-core businesses today that they provide. They own 2 hotels, one in Sharm el-Sheikh, one in Cairo. So I think clearinghouses can also do non-core business and do a very good business out of this. Tobias?
Perfect. I think some very good anecdotes, and I fully agree that there is also a question of innovation, and it also maybe ties up with Werner's point to rather start in focused areas than think about the big bang of combining everything. So think about certain services which you can then leverage across different markets to start with, rather than the big solution.
Mm-hmm. And I would just completely agree with those 5 lessons learned, which would apply not just for the GCC region, but for a lot of the regions we're working with in the East African community and elsewhere. And just say that regional integration has been for a long time, something that countries have really been reaching for and have given up on many times. But with small market scale and very limited liquidity, especially for a lot of frontier markets, it really is almost not an option. It really is like the way they need to move forward. So just keen to continue the discussion, and whether it's regulatory innovations or technological innovations, just help advance the conversation with these regions as well. Thank you.
Perfect. So with that, I would suggest to close the session. It's been super interesting, and I think a few very good points and anecdotes and lessons, learnings and so on came up. I want to thank everybody for the participation and the preparation, and wish everybody a good remainder of the afternoon or morning, evening, wherever you are, and hope you stay safe in the current market and environment. Thanks a lot, everybody.